Welcome to another Q-Floors webinar. Today we'll be talking about managing vendor claims, and we'll talk a little bit about customer returns as well. Customer returns, and then we'll look at the actual vendor claims warranty situations. As a reminder, please keep yourselves muted and don't respond to chats, questions that other people type in, but you yourself can type in your questions. I'll see them and I'll read them out loud and we'll talk about them. But please let me respond instead of you responding to each other. If you didn't know, that we do have our Q-Floors users group on Facebook, and you can join that and post questions and respond to each other there. A little networking place where you can ask other people's processes or opinions or things like that. Use the Facebook page. So diving into claims, we'll first talk about returns from customers. So if customer brings something back, I'm going to use this here, this hard surface, as an example. Here we sold 6 cartons of this material. There's the square feet per carton, number of cartons, and let's say they bring a couple of those back. There's 2 ways you can do that. If the job is still in process, it's okay to do what I'm going to show you on that sales order. But if it's completed, I would not change it. You don't want to uncomplete a sales order and make a change to it generally, especially if you've already paid the sales tax for that month. You don't want to change anything affecting your sales and amounts that you reported to the state relative to sales tax. So if it's completed, you probably want to leave that sale alone. It's technically a new transaction anyway. So you start a new transaction, click new. So you could I'm going to start a new transaction. You could just add a line at the bottom here to show the customer bringing something back. So we'll click new and we do our customer name. And our materials. So we had some laminate and the same color. And we get our square feet per carton. I'm going to use the right arrow key to jump past that highlighted text. If it's highlighted and I start typing, it will overwrite it. So I want to keep it. Jump over here and they're returning 2 cartons negative. That's the key here is your quantity needs to be a negative in order to bring materials back. Not just having a negative price and a positive quantity. That won't work. That won't add it to the inventory. When you sold it, it was a positive quantity. When we bring it back, it's a negative quantity. Times our positive price, and we get our negative total here. Now, a key consideration for many of you is the taxability of the original sale. We don't want to give it back to the customer, refund, and give them sales tax if we didn't charge them sales tax in the first place. So let me get out of this. I'm going to come back to this sale and not save this one. And we did not have any tax here. We have a sales tax situation. So if I add some tax here, or sorry, add some labor. They don't have a price there for some reason. Let's put a price there. So now this is in that use tax mode, which many states have. Most states in the United States have that use tax situation. Some of you don't. And it'll just say sales tax down there. And this isn't something you need to worry about. But if you have use tax going on the original ticket, then when you create that new sales order, you have to put some sort of labor on it, even though you may not do a negative quantity and price and get a total on that line, but you have to do some sort of labor there in order to get to remove the sales tax. Now I'm going to show you a shortcut. I'm going to hold the shift key. Let me back up. I'm going to borrow this template feature. I don't want to save it as a template. I'm not going to use this sales order over and over and over and copy lines from it to create new sales. I just want to borrow that template. So I'm going to hold the shift key, select the line or lines that are involved in this return. They're returning some of this, returning some of that, perhaps. So select the lines, select template, but don't save it. And we'll click new. It's been changed and not saved. No, I don't want to save that change. I'm just going to tell it no. And then I get the template window. I'll selected lines and okay. And then it creates an exact copy of it, but only the lines that I selected. That was holding the shift key and clicking the line numbers. So now I can make my changes here. I don't have 142.8. I'm going to backspace and enter and come back to that. Use the right arrow key to jump past the highlighted text and my negative quantity. Then I brought over some labor, or you might have some generic miscellaneous labor you wanted to put there. Something like that, just to get some labor on the sales order so we don't have sales tax in those situations where the original sale also did not have sales tax. And then we click save. So there's our ticket. Now we want to assign materials. So if it's a salesperson writing this up, they really want to select the same material number that was originally sold. And so if we go back to our original sales order, we see it was number 10. And so we can select that. And save. To give the customer a refund, we click the payments button and we are either refunding by check, cash, or credit card. So credit card is very straightforward. You select your credit card type, maybe what brand of card, if that's necessary for you, and type and date, and then our negative amount to make it a credit payment. We would do it that way. If we're giving a cash refund, they originally paid with cash, probably don't need a description, and then same thing, date and our negative amount. If we're giving a check refund, that's a little bit different. It's 2 steps. We don't print a check from this payment window. So we actually can't select the check type here. If we select check as our type, or cash, or credit card, or ACH, anything other than interest and discount, if we select any of these options here, it will show up in the checkbook screen as an item to deposit in the bank. So we don't have a negative check item to deposit in the bank. We need to print a check. So this is something that management will have to do. This is not something that your salespeople should have access to. We need to select our discount payment type down here. Any description you want, negative amount. When you select discount as a type, it opens up this field to select a general ledger account. And suspense or some in and out account that you might have set up, a clearing account. Probably not. See, what do I have here? Not that sales allowances or returns and allowances. You could select that. I don't recommend doing that because that's on the income statement. It's a profit and loss account. Whereas if you use the suspense or some other balance sheet account, then you can kind of track and see, have I missed doing the other side of the transaction? I mentioned 2 steps earlier. This is the first step, is create the sales order. I'm sorry, 2 steps for the refund. To create this payment here, then we've got to go create a bill. So if we select a balance sheet account and we don't do the other side, or we don't do it correctly, it'll show up in that suspense general ledger account. So rather than selecting something that's on the P&L, select some balance sheet account. So there's our suspense account, and we'll add payment and then close this window. So now that's half of it. Now we've got to go print a check. And so in the bills credit screen, fill in all your details. In the body of the bill, we'll select that suspense account again. Anytime we post something to that suspense account as a negative amount, we should do something else that offsets it as positive, or vice versa. Do something positive somewhere, you've got to do a negative entry somewhere else. And I forgot my amount, 187.62. And then we go print the check. Okay, so that's taking materials back from a customer and giving them a refund. Now, what if we have a problem on a job? What if there's we have a question for credit card? Do you have to put the return on the first invoice and then move it? So if you have a balance, let's see, where can we go here? You don't have to. Let me say generally that no, you don't have to put the refund payment on that first sales order and then transfer that payment to another sales order. Let me know if I'm answering the wrong question, but I think you're asking, do we have to do the refund payment on the original sales order? Okay, so Carrie's saying Heartland makes us select the original payment to get the return. I'm not going to go into Heartland. Yes, you have to do some things with Heartland. If it was through Heartland, then you've got to go and select the original payment and then move it. Yes. So good question. I'm glad you mentioned that. So the Heartland Payment Systems credit card integration that we do, the original payment here would have been credit card. You have to go select that and do the refund there, and it'll post it here. And then you do your discount type, and you'd have to do a positive amount to move it, right? If we did 187.62 as a refund, that would be negative. So now we have to reverse it. So we do a discount, put it to suspense, and then on our other sales order, we do the negative because that has the negative credit balance where we needed that payment to go. Does that make sense, Carrie? Let me just type another chat there. Okay, thanks. So I'm glad you brought it up. Heartland, do the refund on the original sales order, then use the suspense to offset that refund so the balance is back to zero, and then another suspense payment on the other sales order. I've got another question. Would the credit card return work the same way if you were using Heartland? So no, that's same question. So Laura, did we answer your question as well with all of that? Just type another message in the chat there, unless you need me to explain something different. Okay, so Laura's added to this. Yes, but if you refund more than half of it, it will make you revert it back to a proposal. I don't think it will, actually. Keep yourselves muted. Please keep yourselves muted, everyone. So Laura, I don't think it will. Maybe it should. I don't want to say should or shouldn't, but I'm pretty sure that if we have, so what she's referring to is a minimum payment requirement. So here, this database is set up to require 50% deposit. So if we create a sales order and save it initially, and we haven't posted at least 50% payment, you get a pop-up message saying you either need to post a payment or save it as a proposal. So she's saying, what if we refund more than 50%? I'm pretty sure it does not double check that. It doesn't go back and make you enter some sort of payment. If it does, remember you have that override where that's basically, I think, what this one is. where it's a finance type of payment, where you select finance as your type, and then 0 amount. That's how you override the minimum payment. So if it does come back to you and say, okay, you've refunded more than half, you need a payment of at least half, do the override payment on it. That should dismiss it. Good questions. Okay, let me touch a little bit on the material side of this. On my return here, by the way, let me just close up. We would need to eventually job cost this, right? So I think everyone is aware of that. We need to job cost this. It's finished. On the materials, I selected a material that's here. But what if we've already moved that product to a gone status, and we close the journal for that time period? So let's say here we are in April of 2021, and let's say that in December we were cleaning up inventory, and that particular material got moved to a gone status. And we've already closed the journal. We've submitted financials to the accountant, or we filed sales tax returns or whatever. We generally don't want to change that period. What you can do is create a new material. So even if this was in the gone list, you can do what I'm about to show you. Go find it in the gone list and duplicate it. And then click the duplicate option at the bottom right. Click new. How many copies of this do I want? Just one this time. If you're using that duplicate to create new rolls of carpet or pallets of tile or something that you're reordering, maybe you want 4 of those rolls or 4 of those pallets. So I'm going to say 1, click OK. So now I've got an exact copy. That right down to the PO number, reference number, everything's exactly the same, even the original quantity. But that's the problem. I don't have that original quantity. I don't have any. It's all moved to gone. I'm bringing some back right now, but right now I'm starting with 0, so we set it at 0. And then on our sales order, instead of selecting the original product, because it really wouldn't show there, okay, I forgot. Because it's a 0 quantity, it's not going to show for me over there as well. So you would do something like this. Let me clear this line. We would need to get the material number and come back and type that in. Because it's a 0 quantity, it won't show in that material number list. And then we do our negative quantity and our labor if necessary. Okay, so by doing the negative quantity, let's save that and come over here and we'll refresh this material, reload it, and then we see down here we started with 0. We started with 0 and we added to it. And so we now have a balance available to sell to other customers or return to the vendor. And we'll talk about that in a moment. And once we job cost this, we're going to have to put some, I don't have a house or dummy installer in here, so I'm just going to pick one of these for now. You should have your company name or the word house as a last name. Set up an installer. We'll just do one. Set up an installer or put your company name and installer here, but leave that as employee. That's really important. Leave it as employee, not contractor. And so we'll do that. And then we'll select that here. And we'll save that change, and now we can job cost that line. So this is done. Now that it's completed, if we reload or refresh that material again, then we see we have a physical balance now of 47.6. So we've put it into inventory. Now this will show in your no bill list. So periodically you should be checking your no bill list for things like this and doing that no bill list cleanup. There's a document knowledge base article on our website that talks about how to clean up this list. The only things that should be in this list are those where you're truly waiting for your vendor's invoice to arrive. Okay, moving on. Let's see. Claims. Setting up a claim. We have a problem. There's a customer. We've installed some materials. Maybe we take one of these jobs up here. We've installed some things, or we're still working in process on the job, and we come up with some problem with the materials. We talk with the vendor. We get approval for a credit. First thing that I would do is create a new sales order. And we'll select our profit center. And the customer is not the vendor. The customer is not who sold the material in the first place, or whose problem it is. The customer is the customer. If you need to do a search and find things for this job for this customer, you want to be able to search and find everything by that customer name. So this would be our customer. And over here we put our ship to, our job site address, whatever we need to fill in over here. In the body of the sales order, it's really just like any other sale. It's just like any other sale. Any comments, rooms, any comment you need to add there. Theme style and color. I need to sell this again. I need to replace it. So I'm going to have to order this. And I'm going to have to install it. I have to install it again. So we're going to sell some labor. I changed the price on that first line, but really what we need is no price. It's exactly like any other sales order that you create, except we are not charging the customer again. We see some of our customers, Q-Floors users, that will create the sale and they'll put the vendor name up here and the amount of credit that they're expecting from that vendor. But what you're doing is creating a sale, and it's going to show up in your financials. It'll show up on your profit and loss report in your sales. We don't want that. We don't want to report that to the IRS that we sold some more materials and charge the customer this amount, because that's not what happened. We didn't have a sale. We have a warranty situation. We do need this sales order ticket in order to run through the motions of creating materials to be ordered, ordering them and receiving them, sending out a work order with an installer and getting the job completed and job costing it, but we're not collecting money from the customer. So we don't have a sale. There might be a case where the materials that the customer selects to replace the original materials, maybe they do cost some more. So then the price here would be the price difference, not the full $7.99 a yard or whatever it might be. It's the price difference between what they paid for or you charge them for originally and the new price here. Or maybe it's negative. In that case, we don't want a negative quantity. We're giving them a discount on the price because it's less than what the original one was. So just a difference. Oops, let's delete that. So list out all the materials, all the labor that will be involved in fixing this problem for the customer. It's just like any other sale. And we'll save that. And then we run it through the motions to create materials, order them. Now this one's in stock. I'm just going to, for simplicity, select one of these stock items. That's a lot of stock. What quantity did I put there? Okay, we'll just take one of these. So we run it through the motions to create the materials, order them, receive them, We print out a work order, we get it installed, we job cost it. Everything's the same, everything's normal that way. Now, when I know that the credit's approved by the vendor, I would do this, create the sales order, and at the same time, I would go to the bills credit screen and create my expected credit, bills and credits. So I'm going to create my expected credit. This is some vendor. I'm going to date this in the future. You can put it for the end of the current month. I know of some customers that might put it for the end of the current year. The reason for that is we strongly recommend that you're closing your journal monthly. I alluded to that, mentioned that earlier. You should be closing your journal monthly. So this practice database has never been closed. So today's April 1st. We recommend that you close the previous month on about the 10th of the current month. So I've still got a few days away, April 10th, maybe April 7th, right in there. Close March. So I would put in March 31st. If today were April 10th or April 7th, somewhere April 8th, right in there. So let's just say this is April or February 28th is what we should be seeing here. So we close the journal, it runs through the motions, and you'll call us if there's any problems. So the journal should be closed for the prior month. So if I'm doing that, if I'm closing every month and I create a expected credit memo here, and I've got it dated in April, and we haven't resolved the credit with the vendor yet, we haven't received the credit memo document yet, but I close April, then this sales order is locked in a closed period. It would warn you if you tried to change a date, and generally we don't want to be changing closed periods, especially if you're submitting financials to a bank or anyone for any financial reason. So post date it, date it out in the future, so that it's not locked into a period that's closed and you still need to work with it. So we've got our date, invoice number. So for the invoice number and the custom number, I'm going to add some text in here that helps me label this and track these claims. So invoice number is, I'm going to type pending, and my custom number is claim. And maybe you put sale number such and such, or the customer's last name, John Stockton Construction. So anything like that, but I would start it with something like the word claim. I'll show you why in a moment. Now we're not getting terms on this credit. And then the line item. This part's critical to remember, make a note of. The account, the general ledger account that you select on the credit memo is materials, not the inventory account. You know that when you're originally purchasing materials, it's the inventory account. But when we're expecting a credit, or we do receive a credit memo, we need to post it to the materials account. The reason for that is when all is said and done, the account left in Q-Floors with a balance that's not your balance, it's what's being refunded. The way Q-Floors handles it, it's the materials account left open with that balance that we need to offset. The inventory account gets increased when you create the bill to pay for it. It gets decreased when you job cost the line of the sale, the job changes to completed status. So inventory went up with the bill, came down with job costing, so inventory is now zero, but also with that job costing, it posted to materials. So we're creating a new sales order over here for some material that we need to purchase, but it's not our fault that we've got to purchase it. The inventory cost will go down. We're going to job cost this. When the work is finished, we'll job cost it. And I'll need an installer here that did the work. So when you job cost it, inventory gets decreased and it adds to that materials cost of goods sold account. But that cost on your financials is not your fault. Shouldn't be part of your costs. That's what's getting refunded. Materials account. We skip this description, and then we've got our units. You can do square foot, square yard, each, whatever it might be. And we had 4, that's pretty small credit. Let's come back and let's do this -100, or I'm just going to put 48 over here, and 48 cents. And if you're getting credit for the labor, and we select our labor account, and whatever your labor charge per square foot or yard, I don't know what we had over here. It might be more or less than what you actually pay the installer. And so we set up this expected credit, and we save this. It's add to checks. We're going to receive a credit memo from the vendor. So we save it, close it. So there's my expected credit. To track this, to find it, we'll use our custom number and vendor invoice number down here. So if I'm in current bills, anything that shows up as claim for all dates, remember you need to include some future date range if you've post-dated that. If we search for claim and it's in the current bills list, I have not used the credit yet. And remember, you can add columns to your list. Hold the shift key, click one of the column headings. I'm going to add the custom number field. That's text, so left alignment usually works best for text, right for dates and numbers. And so we can see some details there. So I can track that. If I'm searching for claim in my completed bills, then anything there, I've already used the credit. I've quote unquote paid it. I've used that credit over in the checkbook screen. If I search for claim and it says pending, if I search for pending claims, those are the ones that I haven't received the vendor's credit memo document yet. When I do receive that document, I'll make a few changes to this. One, I'll change a date to the document date. Two, I'll change this to the actual credit memo document number, and then I'll leave this custom number, I'll leave it as it is. So that's how you can track these claims in your bills credit screen. We have a question here. If we send a claim bill to a vendor, don't they have to be in the vendor name? How do you keep track otherwise? So I think your question is, how do I do this in a way that I can print something and send it to my vendor to say, this is what you owe me? Let me know if I'm saying that. Okay, thanks. So she said yes. So yes, we're asking, I need to print something and give it to my vendor. How do I do that? So the only way that you could really do that, I think, is put, well, I got double negatives there and it ended up with a positive. So it should have ended up negative. So to do what CTW Floors is asking about is change that bill temporarily to positive, and then print that and send it to them. But then you've got to come back and make it negative as your expected credit. So it should be a negative bill, and I didn't catch that earlier. I had a negative quantity, negative price, resulted in a positive total. That was wrong. So just use that bill, temporarily change it to a positive amount and print it. Let's see. So you're saying we should say you should create a bill. Yes, I would do it on the bills and credit side, not the customer side, because we don't have a total over here. You could do the same thing, I suppose. You could put your vendor name up here and show some quantity and prices and things, but then you want to come back and change it. Remember, we don't want to report this to the IRS as new revenue for the year. That's not what's going on. We need it to be 0 or just a different in price for the new materials that they're getting. But you could do that, change this temporarily to be the vendor name, put some pricing on it, print that, send it to your vendor, but then come back and change it to the actual customer name, and your pricing should be 0 most of the time. So Carmen's asking, how did you keep the credit amount from going to the checkbook screen when saving the bill, then have it show up when the credit arrives? That's a good question. You would simply not save this bill. No, I'm sorry, not save the payment. So we could delete this. Now I think, let me show you something here. I've got a total that doesn't match. Let me delete that. I think I changed things. Okay, so there's our expected credit. So let me put this back to pending. So even if I do save the payment, when I'm in the checkbook screen, one, I've dated it pretty far out there, so I won't be seeing it. But as that date approaches, then I would see it. It'll be here somewhere. Here it is at the bottom. And so when I'm paying bills, I'm double checking. I've got the vendor invoice, the stack of bills on my desk, and I'm paying bills, and I see that does not have an invoice number yet, a credit memo document. So I'm not going to check that one. So that's one way you could manage it visually. Another way you can manage that is this: don't save a payment. So when I close this, it'll warn me I don't have payments enough to pay off this bill. Well, I don't have any in this case. Would you like to edit or schedule payments? Say no, and we'll save. That opens again. Just close. Don't save a payment. And so it's saved now. It's current. It's not paid off. And the software adds this down into the comments: check payment. So you can search for bills that have a payment problem by doing your let's get out of this. So we're looking at all of our pending bills and which ones do I not have payment set up on. One let's see, I can add the comments. So that'd be one way to do it. Add the comments column to the list, and that would show. I've got one there that says check payment. I would probably do it a different way though. Control F as in find, Control F, and search the bill header. The comments are included in the header search, and I want to search for, you don't have to do the whole thing, just it starts with an asterisk and the word check and OK, and then it'll show you all of them where the payments, there's a problem, the payments don't pay off the bill. So that would be another way you could do it. So if it were me, my preference, I would save the payment, and then I've got it showing down here, and I'm just not going to check that one. And I've got it dated out in the future. But you have this other option of just don't save a payment. Let's see, we got another question from Richard. Won't that negatively affect commissioned salespeople by just charging the difference and keeping the costs the same? We returned the claimed material to the original material number, adjust the material out. We return the claimed material to the original material number, adjust the material out on the original material number, and buy new with the full price. Okay, so that makes sense. I'm not going to go through the motions on that one, but I see what you're saying. So commissions, if you have this sales order over here that's got some odd costs to it, then, and we're paying commissions, this one came up with a 0 commission, and that's technically because that person doesn't get commissions. I'm logged in as this Michael Hayes. I don't think it's a salesperson. So it's a good point. Let me do some other things. So just click and enter, click to uncheck it. You want to reverse, I'm just pressing enter on the keyboard to say yes. and we'll save that. So Richard, what you're doing would work. So let me read it again. We return the claimed material to the original material number. So he's putting it back to the original material number on the return. Okay, I see. So in most claim situations, we're not suggesting that you do a return of the original materials, but the way Richard's doing it to not affect commissions would be I can see you'd want to return the materials. Adjust the material out, so he's adjusting the quantity. And then, sorry, that's with this adjustment button. Adjust the material out on the original material number, then buy new with the full price, so buy new materials and go through those motions. So that makes sense. So here's a couple of things you can do other than that. One is this overage button. So if we've got this sales order and here's our commission, let's put a different salesperson on this. So here we've got this negative commission. So one thing we can do is click here. It doesn't matter really which one you start from, and use this overage. Let me read Davina's comment, which is good, but you need to affect commissions on a regular return. Less product sold and different margins on different products. So that's a good point. If we're paying a salesperson commissions up front and we have a problem, is it the salesperson's fault? Probably not. But if we're doing commissions based on profit, this is something that affects the profit. This is something that affects commission. So I can see different philosophies about that. Definitely what Davina is saying, less products sold, different margins on different products. So her suggestion is, yeah, it might need to affect the commissions in the first place. So this overage button, I'll click it here and then type in the other sale number. That one is number 28 and hit enter. And then we're seeing some numbers here. The linked cost is the other job. So here we're seeing our negative. Here's this particular sales order is sale cost, sale total, sale profit. And then combined, what if we looked at the two sales orders as if they were one? So it shows a new total commission. So it's combining all the retail, all the costs together and coming up with a new commission. So instead of paying $204.39, we would maybe that one's already job costed and we've paid the salesperson that, so we would come up with a difference and go plug a negative commission in on that other sales order. Okay, and if you click OK here, sorry, actually here's the total commission calculated, total commission added. That's new. I don't know what to say on that. Sale commission. This is just adding the two together. But this is what the calculated new commission would be. This one's just saying that there's $204 on this one. The other one's a negative 26. That's just adding them up. This one is what the commission should be, ought to be, if we looked at it as one complete job. So link sale, type the other sale number in, click OK, and then that overage button shows there's an overage link. It's linked to sale number 28. Davina is asking, can we link more than two sales? No, you can't chain them together and have it read 4 or 5 sales orders as one. It's only a one-to-one link. You do not need to go over to the other sales order and create the link backwards. You don't have to. Just what you need to do is you don't even really have to click OK because it's not making any change. Notice that it didn't change its commission. It's still the negative. So you don't have to even type the number. You don't have to click OK and save that linked number. Just get the number you need and go make the change on the commission over here. So that's one way you can do it, to where if you are going to affect the commissions, unlike, let's see, I forgot who it was, Richard saying, I don't want to affect the commissions, and the way you're doing it, Richard, that would accomplish that. So let me show you another feature. This is brand new. If you're in our Q Cloud, this version of Q-Floors that I'm using here, this is, if you click help, click about Q-Floors, my version number is over here. It's 8.148. So what I'm going to show you is in this version, not any previous version. And we've got a question here. If you link the job, so we're coming back to this overage link. If you link the job, that doesn't actually change the commission. No, it shows you the data. It's up to you whether you want to change it or not. Kind of what going to what Richard was saying. So we could change the commission, but we're not changing it. This one changed. That was 204 something earlier, and it's now different. I don't have an explanation for that. I'm going to have to get with programmers and find out what happened. So to CTW, well, something changed, and I don't know what or why. And it's showing this one, it's not negative 26 anymore. And Richard is saying profit on labor. There is profit on labor and pad and things. So the things did change, and I don't know why. I've not seen that before, so I'll figure that out. If there's a bug, we'll get it fixed. But it did make a couple of changes there. That one did not change. So moving on, let me show you another feature. Here's our sales order. Here's our costs. And here's this zero margin. And Davina did the math there. The two commission amounts together equal the amount commission should be. So it changed it. So it's no bug. So it did. Davina, you're saying it did change the commissions? Let me know. That'd be good to know. But I'll test it out anyway. So there's a way that you can take these costs, these credits, and apply them to that sales order. So it's sale number 28. We've got negative here. Now this can be done. What I'm going to show you can be done whether it's credit or positive. So you might have some other costs on some bill. Maybe we had to rent some equipment or something for a job, and we want to assign that cost on this bill to a particular job. So this is a brand new feature that we've introduced in this latest version of Q-Force. So in the description field, normally when you type materials and you hit enter, the description field is just this little box you can type a little something into, as long as it's not inventory. We've changed it where if it's some other account, not inventory, then this box is no longer some little box. You can still type whatever you want, or you can select the sales order. Now it's looking at the job name. We did change it where you can select by sale number, but we're working with this one here. So I'm going to select that. I'm going to come back here, and I'm going to select that and click save. I'm not going to save my payment again, or maybe I am. You've got your options there. So I've now assigned those costs, in this case negative costs. Oh, sorry, back to the sales order. If I reload this, we've got this new section here, this negative 93 coming from a bill. And let me see, right click that amount, and you get this little window, and it tells you vendor name, what's the bill number, the line number on the bill, what general ledger account was selected, what's the amount, here's your total costs altogether. So brand new feature. So it'd be another way where you're not affecting commissions so much. You're bringing the credit back into this job. Now we've got shipping and overhead here factored into the cost, so we didn't come back square, but it's close. It's going to get you to really where you ought to be, because you're calculating these on every job anyway. Any questions on that or anything else we've talked about? Okay, so we've gone just shy of an hour. I'll wait for any other questions. Davina, thanks for doing the math. I usually don't math, especially on the fly. And so thanks for doing that. So Davina's saying, yes, that overage thing did change the commissions and it changed them to what it should be. So that's good to know. Sorry that I was mixed up on that feature. It looks like it changed and I wasn't aware of it, and I apologize. This session is recorded. We record all of our webinars, except for the one time that I forgot to, and I had to do it not live and record it. But these are recorded, and we post these on our website. So you should see tomorrow or the next day, well, tomorrow or Monday, you should see this webinar. Where's come to Q4's website. Oh, I'm already logged in. Log in and training videos. If you don't have to click it, just hover your mouse over training videos, and then down here are your webinars. And I've got another question. I'll come to that. Thanks, Alexa. The webinars are listed here. So you'll see a new item added in here for today's session. Okay. Alexa asked if I can touch on the reason why the installer name in the employee subscreen should be employee, not contractor. So she's talking about something we looked at earlier, where I set up a house installer on some line. I think it was this one. So I set up a dummy installer, as I call it. The reason it needs to be employee is because of a feature under setup, miscellaneous, this post labor on sale completion. So having this checked, and it should be checked for 99% of our users, our customers, that should be checked. If it's not already checked, don't go in and just check it and turn this feature on. There's a document on our website that's labeled post labor on sale completion. So go just do a search in the knowledge base section for that and follow those instructions. But it has to do with that the job costing of a sales order includes, the journal entry of a sales order when you job cost it and it changes to a completed status. That journal entry includes the labor cost, posts it to your labor cost of goods sold account if the installer on that line is a subcontractor. If it's an employee, you're probably paying them differently. There's taxes involved and things, so it's not quite the right cost. So we're not costing that to the job. Or at least it's not posting in the journal entry, because you're going to do payroll separately, and that will account for the payroll then. So it has to do with job costing, posting the sale, the labor cost, along with the journal entry for that sale. So read up on that post labor on sale completion knowledge base article. So you go to knowledge base. It's this one right here. So read up on that document. If that feature is not turned on, you might want to do a double check in your own system, do an audit of this right here. For each subcontractor installer, double click the gross pay item. So we're going to come over here. And if it's a subcontractor, double click this gross pay item and make sure the account is contract labor payable. So that's what that paragraph 5 is saying to do. Make sure that account is set. We've got another question here. What about cancellations where the material has been ordered but never received? Maybe the material's on back order or something. How do you cancel the order and cancel the material that is on order? That's a good question. That relates to some of this. So we've got a sale over here. Let's find a sale we can work with. There we go. So the customer has ordered this. Looks like we haven't created the materials yet, so let's go do that. That was sale number 24. So we create the materials. And we order it. And it's on order. Whether it's on back order or not, if it's on back order, then you'd want to come over here and change the status to back order. What's our expected received date or release date? And then those show in the list with the red box if it's back order status. And by the way, the line item on the sales order shows back order as well. So how do we cancel this? Customer backed out, we're okay with that or whatever. So one is just change this sale to proposal. You might want to double click, let the software take you to that material in the background just so that it's brought up and being viewed, and then come back to your sales order and make this sale a proposal. They've canceled. And then save it. That's making it a proposal releases the material from the sales order. It's no longer linked to the job. So we come back here and reload or refresh that material, is no longer has the customer details down here. So then this material, we'll just change it to gone and save it. I'm going to leave it out there for a moment. What if we're charging the customer a restocking fee, something like that? So maybe we don't want to have this be a proposal. Their minimum deposit. So let's post one. Finance type, 0 amount. And so here's our sale number 24. So we've sold this, we have materials assigned. So if I'm going to charge a customer for something, I need a sales order to charge them. So I'm going to create a new line that says sofa. We'll select the sofa. That's the one. Negative quantity to bring it back into inventory, and select the same material. Put it back into stock. And then on a new line, I'll do a non-taxable line where I can put here so a non-taxable line, we stop at the quantity, so put in something there for restocking fee, something as a style. Don't really need a color. Definitely no material number. We don't have a box of those out in the warehouse. We're not going to select the material number. And then down on the labor line, we want our house installer. Actually, we don't need that. We'll leave it though. No labor, and then put your restocking fee down there. So we have charge the customer, refund the customer, restocking fee. So now we have a sale of $75 without taxing that service, that fee. So that's one way to do it. When we have a product returned from a customer and we assign it to an in-stock product, how do we get rid of it from inventory? Great. I mentioned that earlier and didn't go back to it. Do we assign it to a bill or credit that we are expecting from the vendor? No, there's not a way. So we originally paid for it, right? That product's already attached to its original bill. So let's take one over here. This one is not. This is the one I created that's 0, so it would be attached to a dummy bill to get rid of it. So you really just send it to gone. That's all you need to do. You do want to make sure that it is attached to a bill first. Now you're asking, this is Laura, she asked, do we assign it to a bill, the credit that we're expecting? No, you could, you really could, but this is, we're signing to an in-stock product. So this one I created because the in-stock product was in the gone list. Remember that? So let's just take some other material. Let's take this one. It's not attached to a bill either. Let's attach something to a bill somewhere. It's in a closed period. So let me do this differently. So normally we're not changing closed period. I just need to get this set up to show you. So normally if we're returning it, attaching this return of a customer to an existing product, we've already got it assigned to a bill. It's some stock product. It's already attached to its original bill. So therefore you cannot attach it to the bill, the credit that you would create expecting from the vendor. But we're returning this balance, right? We have some physical balance. We're returning it to a customer. So all you really do is, if I'm sending the whole thing, let me, sorry, I need to do one other thing. We need to job cost that line. So we've got a physical balance. Okay, so we've got our physical balance and our available balance match each other. That would be the case. If I'm sending the entire quantity back to the vendor, when I send it back, I'll just change that to a gone status and save it. In the background, because it's attached to a bill, software will create a journal entry to credit your inventory, decrease inventory, and post it to your materials cost of goods sold account. If it's not attached to a bill, that journal entry isn't going to happen, but you need it to happen. That's important. That has to do with that credit memo I talked about earlier, where we assigned the credit memo to the materials account because it's the materials account left open with a balance here. So we just change it to gone status. If we're not changing it to gone, maybe we're not sending all of it back, we're sending just something back, part of it, then you just do this adjustment. We're adjusting negative 2 cartons, and then we'd need to change this to the linear, right? If this is width and length, the length is our number of cartons, so we need to change this to linear. Or we could have hand calculated 23.8 square feet per box times 2 boxes and typed it in as a total square footage. Any comment you want to put in and do an adjustment. So that would be another way to show that I've returned it to the vendor. That would have been my comment in there, actually, right? It's returned to vendor on such and such date. Another question, Jack asked, if we duplicated the return, the duplicate wouldn't have a bill. So good point that this one's up here, not attached to a bill. This is the 0. We created a duplicate of the original. It was in the gone list, and we duplicated it. No bill, and I mentioned earlier you should attach that to a no bill dummy bill. Go read the document on cleaning up the no bill list. But Jack's saying, if we duplicated the return, the duplicate wouldn't have a bill, correct? Can we assign the return, this item here, to a credit created in bills? You could, because there's no quantity on it. You just have to attach it to some bill. So if I'm going to return this to the vendor, I've got this quantity now. If I'm sending it back, I need that accounting entry to happen. So you can attach it to the credit memo bill, or you can attach it to a dummy bill. My suggestion is don't try attaching products to the vendor's bill. If you keep that as your standard, then you're not wondering, well, in some cases it's okay where I've duplicated it and it's a 0, but in other cases I can't because it's already attached to the original bill. Then you don't have anything to worry about or question or wonder. If you just attach any in the no bill list, if it's in here but shouldn't be because I'm not expecting a vendor's invoice for it, then just attach it to a dummy bill for the no bill list cleanup procedure. But to answer your question, Jack, yes, you could. Yes, you could attach this to that credit bill that we created earlier that represents the credit. We could have attached it over here. Inventory account, and select that item, and it would have a zero quantity times some price, some cost, but the total would be zero. So good question, but I probably wouldn't myself. Any other questions? We have a question here. HP is asking, it seems like there's a lot of gymnastics to go through with these returns. Are there going to be any simplification of these processes with the new version of the software? There's not a lot. We've talked about some different scenarios. To me, I don't see it as a lot of hoops to jump through. The return itself, if it's a return, so you use the word return, so I'm saying a return to the vendor is what I'm guessing you're talking about. There's really not a lot to that. If I'm returning it to the vendor, I make sure it's attached to a bill. So we do the no bill cleanup and then either adjust it, do an adjustment because I'm sending part of it back, or I send it to gone if I'm sending it all of it back. So really not a lot of, we had some questions that asked, well, can I do this? Can I do that? Well, yes, you could, but if you want to simplify it, don't do that. Do the things that I've shown you. Just do the adjustment, attach it to a bill, this dummy bill, and then either adjust it if we're sending part of it back or just send it to gone. That's the simplified method. So good question. Thanks for pointing out that it kind of got a little scattered there with people's questions, but shouldn't feel scattered. Make sure I answered all of this question. As far as simplification in the new version of the software, I don't know of any changes to anything in QPro relative to this, or any update to QFloors relative to returns in that. Something that we can definitely try and piece together, something that simplifies it. Davina saying that it is convoluted. So let me run through it again. If you have a return, the customer's bringing something back, there's only two, maybe three issues. So see, here's our return. Negative quantity. That's critical. Make sure it's a negative quantity that adds it back into inventory. If there was sales tax, so here's one convolution, I suppose. If it was a use tax mode on the original sale, you've got to get this back into use tax mode. It's just a little dummy labor line. And negative quantities, save it. So that's one issue, is the tax. Second issue that might be a little convoluted is the payment back to the customer. If it's cash or credit card, is just post the negative payment. If it's Heartland, okay, there's another little issue. You've got to go find the original invoice and refund it there. But the check payment is the difference here. If it's check, we don't do check type. We do the discount payment type. To suspense account, do our negative amount, and then we'll create a bill posted to suspense. So it's really not that bad. I don't think it is, but I'm not saying what you should think or feel. But it is just a few steps, and I don't see it as a lot myself. So that's a return from a customer. Repairs, refunds. So this repair/warranty thing, that's what we did up here, where you create a new sales order for everything that that's involved in getting this repair done, just no pricing. So that shouldn't be too convoluted. And then order received, job costed, everything's normal there. The credit from the vendor is pretty straightforward. Vendor name, post date it, a couple of things to help you track it. Materials account, labor account if you're getting credit for labor. We did talk about the new feature where you can add those costs, the negative costs, back to the job. So again, it's just a few things. We talked about a lot in between, so that might make it seem convoluted. And Davina, you've had the software for a long time, so I know you're saying that it feels more. You've been doing it longer. Jack is asking, is there a dummy version of Qfloors we can use to practice? There's not a demo or practice version of the software, unfortunately. Let's see, we've got another question. This person's not an accountant. So I talked about some accounting things just to emphasize you need to select the materials account, or with the employee thing over here, I mentioned some accounting things that has to do with the journal entry. But as far as doing it day to day, there's no accounting involved other than the person doing the bills needs to know what account to select. A typical salesperson should be able to do this. They just need to know when a customer brings something back to negative quantity and put it to the right taxable situation as the original sale, not accounting. If it's a repair warranty situation, the salesperson already knows how to do this. It's just like any other sale, just no price. So a typical salesperson can and does do this all day. This one just has no price. Back on the sale, this is Tim, back on the sales order. Wouldn't that restocking fee on line 3, forgot which one we did there, show up in the sales confirmation screen? Good point. Yes, it would. So 2 things. One is salesperson shouldn't be able to do any job costing, checking off the boxes, but they could have someone job cost it, send them a task or something in the system. Remember, Control T will create a task. I'm not going to go through that. Or change the status on the line to hold. And that, so this is 24 line 3. So if I come over here, sales confirmation 24 line 3 is not in the list. You can see the held items, the hold items, checking this box down here. Everything on hold is in here. Once it's job costed, it won't show up in the list either way. So Tanya is asking, she's suggesting a procedure. I'm not going to read through it or go through it. She's suggesting, wouldn't it be simpler to do this, do that, just like an invoice? So that would be feature changes, just changing the software. So probably right. We'd have to talk more in detail. Why does the new sales order have to be made for returns if the job is not closed out yet? So I did mention if the job's not closed, you could do it on that original order. I did say that. If it's closed, then I would create a new one. So Beverly, sorry if you didn't catch that. But if you have a customer bringing something back and the sales order, the job's not completed, then I think I was on this one where I said you could do what I'm going to show you on the line here. So we could have just done Town and Country Laminate, traditional oak, -2. And then I said, I didn't show this, but I said, what I'm going to show you next could be done on the original sales order. So sorry I didn't maybe go through that completely. But that would just reduce our total here. And then we'd want to make sure we select the original product number. So thanks for bringing that up. So we've got a clarification here of a previous question. Let me convoluted to track the credits. So here we've got our credit. you could track the credit note on a job like you do with inventory, then it would be very straightforward. Yeah, we might have to have a conversation. She's saying it might be hard to explain, and I don't think I'm understanding. So to track the credit, I don't know that this is what she's referring to. Is what we showed earlier, pending as your invoice number, claim as your custom number, and then you can track that in your bills. That's where the credit is. The credit is not the sale. The sale is getting the job done. Tracking the credit is in the bill screen. Somebody's saying, CTW is saying, we just make a new material for the credit, positive quantity. It's a negative cost. On a sale line, you need to increase the value of that inventory, the quantity of that inventory. And so by just making a new material for the credit with a positive quantity, that doesn't accomplish what needs to be happening in the background. Yeah, Tanya sent another comment. I think we need to talk about things that are happening there, and I think you're making good points, but I think it's outside the scope of this. I mean, it is part of this, but I'm not fully understanding, so we'll have to talk about it. Thanks for bringing it up. What else? Good questions. And if I need to run through the motions again, I'm happy to run through the motions again. Okay, no questions coming through at this point. So thanks for joining. Thanks for your questions. Thanks for pointing out things in the software that you're wondering about. Hopefully this helps, and call us, schedule an appointment if you have questions about specific things or issues you're having with any of this specifically. Have a great day.